Hello and welcome to this video looking at the latest advances in energy credit risk technology and how they are improving the energy credit function. This is obviously much welcomed given today's greater focus on energy credit risk due to things like increased geopolitical risk, meaning firms need better visibility of counterparty risk across entire supply chains, and the recent extreme market volatility, which revealed the need for better visibility into margining and collateral management. And additionally, longer-term concerns around climate and ESG risk are raising the credit risk of much of the energy sector. I'm Stella Farrington, I'm Head of Content at Energy Risk, and I'm joined by Ellen Stars, who is the Credit Risk Practice Lead at Brady. Welcome, Ellen.
Hi, thanks, Stella. Good to be here.
So I wanted to start by asking you what you see as the most significant advances in energy credit risk technology in recent months.
Well, over the past 2 years, what we've seen is that firms that have an integrated approach to credit risk management have survived and emerged, whereas others that have a defragmented approach have suffered and in a lot of cases failed. So this has resulted in a convergence of interest in having a central credit risk management function, where credit risk managers are looking for more effective monitoring tools so that they can monitor the ever-changing risks related to things like credit, operations, and geopolitical risks. And so also, having an approach where they can look at an integrated approach where they can work with their trade finance teams, their CFO, their banks, their investors and creditors. And from a technology perspective, the most strategic advances really have been in having more active and real-time pre-deal limit counterparty checking, real-time or near real-time exposures and PFE calculations, and more efficient ways of managing collateral, of the financing of collateral, and sort of new credit mitigation techniques that have come onto the market.
Yeah, okay. So Brady's credit product is called C Risk, which I believe you purchased in 2021, but you've been in the market a lot longer than that. Tell us a little bit about your history and bring us up to speed.
Okay, so Brady Credit Risk was also known as Energy Credit, and that was a vendor-led solution that started its life at a company called Raft back in 1995. It went on to be owned by Financial Objects, Temenos, and it was bought by Brady in 2016. It is a very rich, it's a system with a very rich set of functional and market coverage. On the other hand, C Risk has been a system that's evolved through customer requests and user requests to build a software around their particular functions. And so, having the best of both worlds, where we have a system that's, been vendor-led as well as one that's been led by user requests, has really given Brady a unique opportunity to bring the best of both to our customers. And so we look at, Brady C Risk being a cloud-enabled solution offers our customers, the advancements in being able to manage the technology on the cloud effectively and take advantage of more efficient use of the managing and maintaining the software. It's also got a very rich set of standard functionalities with the flexibility to allow customers to add additional customizations if required. And it's from a maintenance perspective, it's very easy to maintain and it's scalable. So we know that we can change it to meet future market needs and requirements.
Right, okay, so there are lots of familiar names there in your past.
Yes.
So as I understand it, going forward, your new customers will be put onto Brady C Risk.
Correct.
Why is that?
Well, for Brady C Risk, it's a more modern cloud-enabled solution. So that in itself brings a lot of advantages. And we see that, it has a very user-friendly, very intuitive interface, and a lot of people find it really intuitive and easy to use. It's also got a very good set of data analytics. The database itself is very easily navigated because it's very well architected. And some of the things that have always been a priority are things like speed and performance. It's really vital in a counterparty credit risk system, particularly when you have to value quite a lot of, in some cases, the entire portfolio in near real time. So performance has always been something that's been maintained and been a top priority at each version and each release of the software.
Yeah. So could you give us some examples of the kinds of things that your customers are using C Risk for? What are they achieving with it?
Well, most of our customers are using C Risk to efficiently manage their collateral and their margining, which has been, particularly tough given the liquidity environment. So having a system that's got best practice, good workflow, and can allow you to efficiently manage and mitigate and make the best use of optimizing credit mitigation techniques has really been helpful in volatile times, as well as, of course, in less volatile times. Yeah. A lot of our customers are using it for pre-deal limit checking, monitoring their exposures, and of course liquidity risk, which is also something that's been really important given the turmoil of the past few years.
Yes. So for firms that might be considering perhaps moving off spreadsheets onto a credit risk solution, or maybe switching their credit risk product, there's a lot of upheaval involved, and I guess a lot of thinking is required beforehand. What would you suggest, that people need to think about in terms of getting ready for something like that? And what questions would you recommend they ask vendors?
So for we've actually had customers like that have actually moved from spreadsheet systems to, and now appreciate the sort of buy versus build, because there's a lot of data that needs to be gathered in terms of, for measuring and managing credit risk. So along with things like all your agreements, your securities, your reference data, all your counterparty data, all your transaction data, it may all be coming from multiple ETRMs, multiple different systems. So the data challenges alone are quite important for you to kind of look at up front and analyze, well, what data sources do we have internally and externally that are required to go into measuring and managing our credit risk. And from a sort of technological perspective, obviously the systems need to be quite robust and scalable, because you're continually trading, your volumes are going to grow, so it's got to be performant and scalable. But it's also got to be able to have the capability of measuring and managing data in real time quite quickly, and giving you good data insights into where are your portfolio concentrations, where are these hidden risks that you may not necessarily see in a spreadsheet. And from, what I would really say to people is, from a sort of project implementation perspective, really start with the business objectives. What are the business objectives you need to achieve? Then look at the data that's required to achieve those objectives, and look at the technology that you need to also achieve those objectives.
Yeah, okay, thank you. And what do you see as being the next big focus for energy credit risk managers?
Well, what we've seen over the last few years is that having a central counterparty risk management team is becoming vital for organizations. Managers want to be able to see, senior managers want to be able to see what's our true exposure, aggregated, and get a true picture so that they can, manage that exposure and take a proactive management of how to maybe implement new credit mitigation techniques, and also have insights into things like reporting and business intelligence so that they can proactively manage it and make the right decisions. So from a sort of, what we're seeing in energy risk companies is that these companies are, they're looking at having more of a top-down approach to credit risk management. And a key component of that top-down approach is having the centralized credit risk system in place. And from a technology perspective, then, Brady always wants to stay at the forefront of technology. We, along with other vendors that are out there, we're looking to make sure that we bring the latest data analytics, the best advancement in data visualizations to our customers so that they can proactively understand and manage their risk.
Could you give me some examples of the types of projects that people are using C Risk for? What are they achieving?
Okay, so this year we went live with one of the world's top LNG exporters. So their activity, it involves physical trading, freight trading, portfolio optimization, trading and risk management. And they're using Brady C Risk in the cloud for pre-deal counterparty limit checking and exposure management. And they've really, achieved a lot with the solution. They've gone from using spreadsheets where they had spent a lot of time doing manual input, doing a lot of cut and paste, which is also prone to human error. So they're very happy with the new system. So we've also migrated a long-term Brady credit risk or energy credit risk customer from BCR to Brady C Risk this year. They are a large energy trading organization, trading wind, solar, gas and oil in over 30 countries. They're now using Brady C Risk as their core credit solution for pre-deal limit checking, monitoring exposures and potential future exposures, and managing their margining and collateral. They're using C Risk on their private cloud, and they've reported seeing lots of improvements in terms of speed and performance. Their end-of-day batch runs are running a lot faster, so they're very happy to rerun calculations even on the fly. And they've also reported that it's a very user-friendly and intuitive solution. So, some of these projects, along with others that we've done for customers throughout the year, we've done things like we've enhanced our collateral offering and our business process workflows, and we've made a lot of improvements as well to our liquidity risk calculations and monitoring.
Great stuff. Ellen, thank you so much for your time and insights today.
Thank you, Stella. It's been great being here. Thank you.
Ellen Stars, Credit Risk Practice Lead at Brady. And more information can be found at bradytechnologies.com. Thanks for watching.